Hi, here's what home sellers and buyers need to know as we wrap up 2024 and look ahead to 2025. With December well underway, our market enters its quietest month of the year. As we close out 2024, we have returned to seasonal norms, with sales slowing in November to just under 1,800 units, that being 400 fewer than October. Yet just almost 1% higher than November of 2023. This slowdown is typical with end-of-year trends and transitions us more into balanced conditions. Prices continued to soften in November, with the total residential benchmark price coming in at $587,900. Roughly $20,000 drop from our market peak in July, and similar to February levels. This was the fifth consecutive month of price declines, driven by increased inventory and a shift towards balance. Our current benchmark price sits just over $15,000 higher than November of 2023. The months of supply is now at 2.42, showing the market's move away from extreme sellers' conditions seen in the first half of 2024. We've been hovering near this range for the last few months, signaling a potential stabilization in demand. While the market as a whole leans towards balanced conditions, differences in asset classes and price ranges tells a more complex story. Apartments are inching into buyers' territory, with the Northeast seeing nearly 6 months of supply, a large contrast to tighter conditions in other segments. Row townhouses and properties in the $500,000 to $700,000 range remain strong, remaining in sellers' market dynamics, although just barely, due to consistent demand. And even the $700,000 to $1 million market is not oversupplied at present, showing balanced conditions. What's ahead for 2025? As we turn the corner into the new year, the market is favorable for another growth phase, with variations by property type and price range. Apartment condominiums may face oversupply, particularly in pre-construction. In contrast, row townhouses and starter homes in the suburbs are likely to remain competitive, supported by affordability and high demand. Despite current balanced conditions, Calgary's market rarely stays static. The tightening observed in the mid-range price segments suggests that the first half of 2025 could see a return to stronger sellers' conditions. Advice for buyers. With apartment condos into balanced conditions, those looking at new pre-construction units should take caution. They may carry higher risks due to oversupply projections. Row townhouses or smaller suburban homes will remain in demand and offer more stable investment opportunities. Buyers have it much easier than they did in the first half of 2024, and it may not last long before we see tighter conditions come back. So if you are ready to purchase, start your process sooner rather than later. Advice for sellers. Effort goes a long way. Prepare your property, show it in its best light, and tailor your marketing and advertising strategies to your property type and price point. As Calgary moves into 2025, the market is expected to tighten once again, particularly in the first half of the year. If you are considering selling, this may be the best time for you. Advice for both sellers and buyers. There is no one-size-fits-all. Each price range, area, and asset class is performing differently. While we may shift back and forth between seller and balanced conditions into 2025, depending on the segment, our market is healthy. The right time for you, whether buying, selling, or both, is to make a change when you are ready. Happy holidays to all, and I'll see you in 2025 for the next market update.